So one of the first things that I need you guys all to know is that if you are down on the day, the overall market's down. We actually are approaching previous support levels right around 14,300 that we were testing or retesting just a couple days ago, right? Market's very oversold. This is the NASDAQ market. You can look into not just the stocks that you're invested in, but look at stocks like Google, right? Google is down 3% today. It's very oversold. It's pulling on back. Overall, major markets are pulling back. I never want you guys to think that you are alone. Markets are in the red. Most of them, especially tech. There are some industries that are doing really well today, though. Airlines, I actually have a watch list for airlines very quickly. You can see that most of them are in the green, but not by very much, right? And as well as automotive. Congrats to everyone that's in Tesla. Tesla hit highs of $800 today. It's quickly pulling on back. But also, same thing with General Motors and the same thing with Ford. But it's not like they're absolutely killing it. They're doing well. They're in the green. But tech is pulling on back. That's the first thing that I wanted to share with you guys, because I don't ever want you to think that like you're alone with these red days. It's hard. It's difficult. I get it. It's been about 2 weeks of the market pulling on back. But guess what? We went a really long time with the market being consistently bullish, right? We've gone months where there's no pullbacks. So if you can't accept the red days, you haven't earned the green days. Understand that these pullbacks are part of the process. With that being said, I want to talk about a stock that we talked about yesterday that was my favorite stock. That is both bullish, consistent, and of course a decent deal based off of current patterns. A lot of you guys like when I make these videos, and if you want me to continue to make them, all I literally ask you to do is to smash that like button and consider subscribing if you guys haven't done so already. But this stock itself is CORX. This is Crocs. And it's a weird, right? It's like, really, the shoe company? I get it. But look at this shoe company has a market cap of $8.5 billion. And not only just that, but it's super bullish, meaning that over the past year, it's gone from $8.40 to highs of $163. Think about that. Think about that. Absolutely insane, right? It's been so consistently bullish. It's recently pulling on back. And looking at this on the 4-hour time frame, we can see that, yeah, it's still selling off. So one of the first things that you need to know is that, yes, it's oversold, but it doesn't mean that just because it's cheap, it can't get cheaper. It could continue to sell off, which is why if you're part of Learn, Plan, Profit, we talk about the 3 stages of a reversal and our position size, right? You don't want to aggressively buy when it's selling off, because just like this past 2 weeks, right? You don't know where the bottom is. You don't know if it can continue to sell off. So make sure that you're aware of that. I would love to follow up with Crocs when it begins to trade above the SMA line and above the EMA line, and or at least indicating signs of an uptrend. So make sure that you do your part and allowing that opportunity to present itself, because although 136 might sound like a decent deal, what if it drops down to 125? What if it drops down to 105? You don't know where the bottom is. Cheap does not mean that it can't be cheaper. And if you've traded for a while, you know exactly what I'm talking about, right? But from where we're at right now, just to previous highs, it's 20% ROI, which is why I'm talking about this. So that is what earned Crocs to be added to my oversold watch list. I don't know if you guys have different watch lists. I love creating different watch lists for my different interests in the market. And this is a watch list that I created for stocks that have been previously bullish, so the direction is in my favor, big picture, but have recently pulled on back. So Crocs made it into this list. We got Google, we got Crocs, we got TQQQ, which is actually testing new lows today, so that's about to test the SMA line. But a lot of these have not began to indicate signs of a reversal just yet. So cheap does not mean that they can't get cheaper, right? So please make sure you take that into consideration. But again, a lot of the stocks that you can see here are companies like Nike, Facebook, Google, Starbucks, Shopify, Pinterest, decent quality companies that are normally more bullish than they are bearish, but have recently pulled on back due to market conditions. So make sure you take that into consideration. And if you decide to buy in early, let this be a perfect example, they can still sell off, and you can't be surprised by that. So again, you need to understand how to manage your position size. You need to understand how to buy into a reversal. And most importantly, you need to embrace and test your patience. So when that direction does actually present itself, you're able to take advantage of it. So I'm very excited to follow up with it. I hope that you guys are too. Please make sure that if you guys have any questions whatsoever about current market conditions, comment those down below. And if you guys want to join our free group, right, if you're absolutely new to trading, click that first link in the description. But if you want to be able to watch me trade live every single day and learn a little bit more about what the Learn Plan Profit gets to experience, click the second link down below, and maybe I'll see you at Market Open tomorrow. Like always, let's make sure that we end the year on a green note. Take it easy, team.